somewhere a little bit about 4, then you'll start to see the Fed cutting on interest rates, right? So that's the cycle that we are about to witness, right? So here, immediate trade, you can see it here. It's hitting this 50 moving average and probably trying to take a breather. If it clears there, you can expect it to move all the way up here at 40.25. Right? And that would put this number at 1%. So that's your regular move. Nothing major. Yesterday also you saw about 1% move. Again, same thing. Nothing major. So the bigger moves here are, if you discount this wick to the downside, so weekly 200 to weekly 100. That's the bigger move. Again, if it starts to move to the downside, let's say during FOMC, again you can expect it to come back into this number. That's the bigger picture. I don't believe, as of now, I don't believe that it's going to come back down and breach this number. But somehow, for some reason, if it does breach that, then very likely you're going to see. I think this would be the lows for the market for at least for this year. Unless Fed does a 50, then probably it will breach this 200 moving average to the downside. But more or less, I think this is where I think the market should bottom out. As of now, with China reopening going smooth and the what do you call the earnings compression is not as terrible as we were expecting it to be. So things are looking okay. So in that context, the downside very likely is the 200 moving average on the week. Absolutely not plotting anything sub 37 as of now, right? And if that breaches, then for some reason, if that breaches, then we'll start to reassess. But that's the downside, bigger picture, and the upside is right about here, 42. That clears, we'll start to reassess this 42.60 area, right? And as of now, there's no reason for us to plot anything above that. And yeah, let's keep a close watch. So uh, again, we'll get into there's nothing actually to say technical, but you can just watch this chart here, and I'm pretty sure yesterday we discussed this, and everybody have the same charts more or less, and everybody can see what happened. Hit 409. Yesterday, these were my words, I guess. If we have that thing, we can rewind that and watch. 409, take a breather, come back into 5. 5 breaches the 8. And then if 8 breaches, we'll start to see the mean reversion. And if Fed goes 25, I think it will start to revert to the mean again. And watch this chart, watch this technical here, MACD. If MACD crosses to the downside, then very likely, give me a second. All right, sorry about that. So hit this number, took a breather, came back down, and this is, market will not present to us any exclusive signs that you need to go long or you need to go short. But if you want to be, if you want to front run these things, then you have to be really, looking at these kind of stuff. And yesterday we had our thesis. I think somebody asked me. I think it was Ankit, and I think I put out that note that let's say if US 10 takes a breather and the DXY moves lower, then you'll have the rally in the market. So that's exactly what happened, right? So if it moves below 8 and if you start to see this crossover down here, this should not have been the case, right? At this juncture, during the cycle, given that FOMC is about 20 days away, this should not have been the case. This should have been in protracted upside, but it is coming down. Fair enough. Let it do that. So this is the smart money. So this is telling you that the interest rates perhaps are not going to last longer to the upside. That's what this is saying. So if it comes back down and then if it hits this, then you'll see some more upside in the market. Probably about if it breaches the 8, then probably you're looking at 40.30 to 40.50 range on SPX, or rather ES. Right, so as of now, it is hitting this bounce spot, and then you have what do you call this? ES hitting the 50 on the week. So it makes sense for it to take a pause, perhaps a bounce here, and then we'll see. Very likely, this will be an ephemeral bounce, and very likely we'll see the 8 get tested. Right, that's the idea here. And let's see DXY. Same thing, right? No surprises. and this is still pushing downside. Especially the green line is still pushing downside. Although I'll be cautious still to the downside on DXY. I don't think interest rates have peaked yet, but this is pricing in very likely a downside in interest rates. We still have the MACD trying to cross to the downside. Once the MACD crosses to the downside, very likely we'll see some more downside here on the dollar. Now, uh, just because right now the interest rates are driving the markets, right? So just because the interest rates go down doesn't mean the market will go up, right? Again, I think we've been discussing that point. Uh, US 10 is a barometer of growth. This is a barometer of growth. So if you see this thing moving higher, that is a good thing actually. Maybe not for the stocks as much, but for the economy, this is a good thing. And as soon as you see this thing moving down, that means the money. Uh, so why is this a good thing? Because this US 10 going higher indicates that the businesses are able to borrow at a higher rate. That means businesses are healthy. So if you see this thing coming back down, then that means the businesses are unable to borrow at these costs. The money needs to go down. The cost to borrow needs to go down because of whatever the underlying circumstance the businesses are experiencing. So that's the idea here. So pivot, when the Fed would pivot, very likely you will see a jump in the markets. But long term, if you see this thing coming down, that means very likely the growth is slowing, and that means very likely you will start to see a slower market. Right. That's the idea there. Yeah. Now, the trade is actually here, right? That the numbers that you're watching here, it doesn't. You just need to pick a strike for on these charts, the ES or SPX or any other charts. But the trade is actually happening here. The 1 year is coming back down, and we can expect a bounce just about here. If it breaches here, we can expect it to come back down here, 104.50. If that breaches, very likely 104, 104.53. As of now, not plotting anything sub third standard deviation on the hour. Very likely, if it comes back down, we'll look for another bounce here. Let's go here. 5, 8. Likely 8 should hold today. And if 8 breaches to the downside, then you can expect it to come back down here into 104.31. So if the third standard deviation is breached on the hour, let's say 104.53 area, then very likely it's going to see it come down here into this number 104.30. Let's see if we have any other obstacles here. Yeah, I think if this breaches here, then very likely if it breaches the 8, then we can expect it to revert to the mean around 104.09, 104.06. As of now, that's not the case, right? 60 cents to the downside, fair enough. 60 basis points to the downside. We can expect it to go down that, but as of now, that's not the case. As of now, let's see if it can come down into the 8 or even the 5 on the week. 104.22 should act as pretty decent support for DXY. But if it breaches there, then we can expect it to revert to the mean. And the general idea as of now, where things stand, if it goes down, if DXY goes down, then you can expect ES and SPX to move higher, right? Right. So, and now here is the cautionary thing. That's a trade. Now here is how Apple is behaving. This was a clear shot to the upside yesterday, right? And we took this shot, and exactly this is how it behaved. My understanding was yesterday, this number right here, the 8 on the hour, 144.80 area. I was thinking that if it clears here, then things will change for the market. Obviously, Apple, carries a lot of weight in weighted index. Then, yeah, price weighted index. Then you can expect this thing to move higher. Then you expect the SPX and market to follow through. So 104.80. This was the idea here. It cleared this number. Then it moved higher, and the markets moved higher. So now the opposite of these conditions are at hand right now. MFI is all the way up here, overbought signs. Very likely you can expect it to come back down. Perhaps, if not immediately, then perhaps it might take some time. But this things needs to resolve, right? So uh, now the lower time frame charts right here were in line with technicals on the higher time frame charts. So we got this bounce. Fair enough. Now the higher time frame charts are, or rather, some of the indicators are pointing upside, and this thing is overbought, and it should point to the downside. So that's where you'll start to see that chop come in. So if let's say if Apple starts to come back in, the second standard deviation is about 144.76, and here we should expect another bounce at the 100 moving average. That breaches, it will come back down into this number 147.30. And if Apple breaches below its 50 moving average, then we can expect it to come back down into the mean on the hour, which is sitting about 145.50. So this number right here, it would be critical, the 50 moving average again, to the upside. If it, sorry, to the downside, if it clears the 50 moving average to the downside, then we can expect it to come back into the mean. That's the idea there. And if Apple moves down, the market can't move up by and large. Right, this is the lower time frame, and here is the higher time frame. Apple bounce, fair enough. We were looking forward for this bounce, and especially here, mean on the week, it hit that and bounced. Fair enough. And to the downside, Apple is still vulnerable to test the mean, and you can see these things are still down, and you can still see this day is still cross to the downside. However, you have the SMI still trying to cross to the upside. You have the RSI, trigger RSI, giving us another trigger, and you have the Williams R all the way down here. So expecting a bounce here is not a bad idea. Now, Apple cleared the 200 moving average, right? And it is testing the 5 and 8 here on, sorry, the 8 here on the day. So if it clears here, then you can expect it to move up all the way here into 149.50, and the mean reversion is about 150.70. Not sure we're gonna get a mean reversion today. Maybe next week. I don't know. I'm not so sure about this. But let's go here, right about here. So the idea here is that it is clearing the 5 here, and it's going to go hit this number 149.50, 149.60 area, the 50 moving average. And if Apple does this to the upside, let's round that up at 149.80, 149.8. Let's give it a range, 149.80 to 150, right? So if Apple clears that range, then likely scenarios it will go up a little bit further, but I'm not thinking that it will move past the 50 moving average on the day, on the week, sorry, which is about 150, give or take. I think very likely scenario is if the 10-year bounces, let's say if the DX5 bounces here, then you will see some softness coming through into Apple stock. Maybe it will come back down here into this number, the 200 moving average. It has taken again. Now to the downside, we'll expect a 200 moving average, 147.12 to 147 area, to act as decent support for Apple now. If that breaches, the story will again come back down here into this number, 50 EMA. That breaches is going to come back down into this number, and then we'll look for another bounce. Then if it doesn't bounce there, we'll look for certain bounce here at about 143. Not the case for today, but this is to the downside. The 200 moving average should act as support again. That's the base case to the downside, right? Cool. Yeah, so this is the base case to the downside, and if Apple does this, expect the market to do the same. Uh, Now, the other side of this trade is that if, let's say, DXY starts to breach below the 8 on the day, then you can expect if the market doesn't move up, but the market still can stay buoyant, especially if Apple stays above this 200 moving average, the market will remain buoyant. Right, let's go here on this chart. I think we discussed this chart. Now let's go into Microsoft. I bet Microsoft is doing the same exact thing as Apple, right? Yesterday we were looking for an upside. Today it's the exact opposite of yesterday's conditions, and very likely it will start to take a breather, especially if Apple takes a breather. Microsoft will follow Apple, right? This chart, it's the exact opposite of yesterday's situation. Yesterday was a pretty decent oversold conditions coming from day before yesterday's conditions. So it was an easier target to the upside. Now we might see it come back down. Let's say I'm expecting it to come back down into the 5 and another bounce. And if Apple starts to move lower, Microsoft will come back into this 100, the 5 clears. Then you have 100 moving average and the 8, a decent bounce spot for Microsoft. And if that breaches, very likely it's going to come back down into the 50, right? Again, for Apple and Microsoft, the 50 moving average on the hour are likely key spots. If those two breaches below there, then very likely you'll see some decent move to the downside in SPX. Right. So that's the immediate trade, and let's go here on the higher time frame for Microsoft to the upside, right about here, 250, 270, 250, 280. Wherever the 200 moving average is, that should act as pretty decent resistance for Microsoft. If that clears, you can expect it to hit this number right here at 250, 370. Let's reassess the whole situation after, if it does go up all the way to the 21 on the day and clears that, then let's restart, reassess the whole situation to the upside. As of now, even if it hits, I think even if it goes up on the 1 hour chart and hits this number, then very likely it will take a breather. That's my understanding as of now. Why? Because the 1 hour chart is overbought. And especially it will start to give it way to the downside if you see DXY or the 10-year bouncing, right? So yeah, bear that in mind. And let's say if it starts to, if it hits this number and starts to come back down, then you can expect the 5 on the day. If that breaches the 8 on the, 8 on the day, then the 5 on the day, then you have this half trend here, or sorry, super trend, then the 50 again, right? So I'm not really clear on this 50 getting tested again today. But let's say Friday selling comes through, and if it starts to breach below the 5, and then expect it to hit this number, and then expect it to hit this number. If this number reaches about 248.60 area, then expect it to come back into the 50 moving average on the day. Let's see here if we can find some more insight. This is still range bound chart. This is still not very conclusive. The upside is way too high even to consider, the 50 moving average about 257, 258. The downside, the mean is 244. So this is the range I'm expecting, by and large, Microsoft to stay within the mean on the week to the downside, 244.50, and 50 moving average to the upside, about 258. So that gives us a wiggle room of about 14 points. And if you're a seller, then you can look into that range and pick your tops and bottoms. Let's get into some Tesla. Tesla, this thing is, there is a lot of promise for this, and a new phenomenon that is emerging, that people are not selling their Tesla stock. Uh, Good thing, bad thing, I don't know, and I don't really care. And because I'm not an investor, so I don't really care. But this thing is emerging, and this thing seems to be having a lot of promise. Why? Why that perspective? From a high valued company to, just from a EVs company to a high valued company to now to, something more meaningful than that, because of the AI, right? That the AI is, I think it will change the way Tesla, we look at cars, the way we look at data coming through that, all the movements that the cars are making and all that. I don't know, the miles that are running, and then the roads need to. So there's a whole thing that is going on, and there's a whole understanding of how Tesla, can actually scale into other businesses, aviation and all. So there's a whole thing that is happening with Tesla, Tesla's future. I'm, I'm, I, I don't really care. To be honest, I don't really care. I'm not an investor in that. I'm not invested in that. I'm just a day trader, so that's what I'm looking at. So to the downside, again, you'll see this, the weekly 5, there's a 21 as well. That should act as pretty decent support here. And for some reason that breaches, then expect the weekly 8 to get tested, which is sitting about 183.50, 183.70 area as of now. And the upside remains here at the first standard deviation. Uh, Sorry, that second standard deviation, that's about 210 to 11 area. That's the bigger picture. And let's get into the daily chart right about here, right? Expecting 197.60, 197.70 area. If that and wherever the 5 or the 8 will open, right now it's sitting at about 199.40 to 200, right? So that will get tested to the upside, especially if Apple bounces. For some reason, if Apple moves to the upside, then you can expect the 5 and 8 to get tested on Tesla. Why? Because you will have this thing starting to bounce, right? The trigger RSI will trigger on upside because it is hitting the bottom. So very likely a technical buying would come in. Now, even if the technical buying comes in, if it hits the mean at about 250, I think people will still short Tesla. And this bounce is coming from lower time frames. Basically, if you want to go here, right? This is what is happening. Yesterday, this was supposed to, we were saying that even if it goes all the way, this was the chart we discussed yesterday, right? If it goes all the way till here, there's a bunch of moving averages going around, and very likely people will short it here again. So I think the similar sort of conditions again remain prevalent today. Very likely this will start to resolve itself, maybe right till here. The mean reversion is done, upper inner Bollinger Band is done, so very likely it's going to go hit this number, 197.70 area, and very likely people will start to look at a short again here, and again here. Not looking at Tesla above 202.20 today. Some reason it gets there. Again, I'll try to short it. Very likely, I should be able to short it either here, but depending on how things are working out. If Apple is moving higher, even with those overbought conditions on the lower time frame, along with Microsoft, then there is no point looking to short this thing, right? You will get burned. Shorting time for shorting will come, and especially if you see 10-year and the DXY bouncing, that's when we go short that thing, right? Yeah. Anything else in particular we want to discuss? Oil. Let's take a look at oil. This thing is hitting. It's gonna be a range bound thing, but it should have moved higher based on what is happening with OPEC. And if Emirates is considering, exiting OPEC seriously, then there should be, this thing should spike. uh, uh, Instability is not okay. No, any financial market doesn't matter. Any instrument in financial markets doesn't like instability, and stability. Stability comes with everything being the same way. Even with the growth, demand for oil looking okay, but still oil is moving down. I don't understand this. But I'm sure there is some reason for that. The volatility, even with that news, um, uh, that should have been enough for oil to start to push towards, probably 80, but that's not happening. I don't know why. We'll find out. There should be some reason for that, and especially if oil starts to hold and oil starts to push above this 877.40 area on the week, I think markets will hold pretty decent in the given conditions. Uh, Anything else? Anything else? Anything else? All right, I can't think of anything else. All right, let's get into live trading.